Welcome to TradeTheMBI.com. This is John. This report is for the 20th of September, so a little bit more of that white MBI lead and that TLC cyan breakout over green. You can see it when we get that clear rejection is something we look for, and particularly with rising orange in that particular case, was just enough to give us a little bit of softness. It wasn't anything dramatic. We weren't expecting breakdowns. It's still within the continuation of the range that we have been. And once that little crossover came through, so then the question will be what the Fed does today and how that will impact things going forward. From an NQ standpoint, likewise was the same. There's modest weakness that literally smoothed out in the end. Still problematic from a shakeout standpoint for the Nasdaq, and that one Nasdaq from DOC had an earlier rejection, not even as close as the S&P was. So you can definitely see there was a much more dramatic separation between the two. From a Treasury standpoint, of course, doesn't matter what the Fed does now. We're right in the range of pretty much the highest yield so far, and that isn't likely to change, though everyone's talking about how many cuts there will be in 2024. But it's like you got to look at this, and is oil going to abate enough to give that a justification? And not at this particular time. And what would be the impetus for that? The only thing that would drive oil significantly lower at this point would be a lack of demand. And if you get a lack of demand, then that would justify the case. But as it is now, problematic from a future inflation. At least going to be outside the Fed's range. There's no way you're going to get it inside 2%, or even if they decide to change it to 3%, they're not going to get there. So it's just a reality of it. They defended the euro right down there at that 106 range, and have held it up briefly. Wouldn't exactly call it super strong at this particular stage, but it's still enough to be in the support zone, which is so ironic when you hear all these people talking about the end of the dollar, yada yada. Well, it's still, you've got to have something alternative to go to. So where are you going to go? Well, you can go to gold. Gold's been repressed quite a bit given what we're seeing from an inflation standpoint. There's no reason gold shouldn't be moving higher as it is. And then your next thing would be your cryptos, which Bitcoin has made a small move, but relative to what we're seeing, pretty muted, and also suffering potential softness, not exactly sell yet because you still have the magenta over yellow at this particular stage, but with that MBI white lead, definitely puts downside pressure on it. Kind of muted too with our DOC, where the cyan, yes, popped up, but not a strong separation. It's literally just holding in there. So that kind of impetus to be in and out really hasn't faded. And we can start to see some improvement from a shakeout on the ETH here, because before at these negative levels, even if there was a bounce, like I said, it's going to have to roll over until you start getting near or matching lows on, or portion thereof with improved shakeout to where we're getting close to a potential to move back to the positive side. But as long as it's that deep in the negative, you're just not going to get anything. And from our 50K standpoint, as we came down, made those new lows, turned right around, and you can see in the post market here, we've been pushed right back up to the peak of it. So, and that was fairly interesting with where the shakeout built. Now it's positive. So it's just going to be a question now of is that sustainable from a peak, and literally be able to look somewhere in this upper range around 45. Typically would be resistant. Now you've got the falling 100%, which pulls price up to some degree, but definitely going to be some back and forth. Usually prior to a Fed situation, that there's always the run up, and then we see where things shake out to. Post market, you can see all the buying started early this morning, right after the market close. If we go back to the action from the day, it was pretty nice, fairly clean overall. Literally, we started off with the selling. It didn't stop. Look at that shakeout, was super negative. And then this is exactly what I'm talking about. The improved shakeout started. It just took a long time for that to build. And once it gets into that higher pivot zone and that crossover, that's when things finally took control, and bulls were able to create some short cover in that, and it filled in quite a big range. We were literally just pretty close to back where we were before, so not a whole lot of difference. It's just shaking out the weak hands, as I like to say. Scares them out a little bit, and you go back to everything else. As always, though, continue to look for me on the Skype chat if anything relevant pops up, and we'll be waiting to see because later today it should. Um, I'll put any comments there on the Skype chat. Have a good one. Trade well.